Welcome to Trading Lounge and the Commodity Futures Report for Thursday, March 3rd, and just having a quick look at the US yields here. As you know, we're watching it moving up to trading level 2 here at 2% and expecting a move down from that point. The move down so far could be counted as corrective as an A and a B and a C wave here. Even if it had another move, if it drops below here, then we know that we're coming down further. But if it maintains this one here as wave 1, 2, and 3, 4, 5 and pushes to the upside here, we would still just have the first high above the level, so that can also be a top. The only way that we'll turn bullish on this further is if we get this pattern here and we get a move across this point at that stage, then we'll extend the wave structure to the upside. So we know that the Feds were talking about 25 basis point rise in March, so everything's sort of on track as sort of expected in that point of view. For the US dollar index here, we're looking at wave 3 here, an A and a B and a C for wave 4, and then 1 and 2, and essentially 1, 2, 3, 4 and 5 here for the third wave. We can have a possible top in here. We've been sort of toying with that today. It looks like it wants to push up further. I would only turn bearish if the 700 here became the resistance at that point. Otherwise, we've still got further to go to the upside, so this would move over to here. We can just move that out the way for a moment there. It would still need wave 4 here as wave 3 here. Well, this wave maybe not finished here because we look at that as 1 and 2 here and 3 and 4 and 5, so that's probably sitting there as well for that. And wave 3 there, and then wave 4 and then wave 5, so still more to go on this side. It is possible to look at this as 1, 2, 3 and then A, B, C for 4 here and 5 here and put that top in there like that. I understand that, but would only do that if the 700 became the resistance at that point. Okay, the euro still needs to make a new low down to 1.1, so we're on track there as well, and you can see the euro video for that. Okay, moving on to gold. So with US spot gold here, we're looking at wave 3 here and 4 here and 1 and 2 and 3 and 4 and 5 here. So basically we're looking for a classic trading levels pattern at this point. So this would be the at major trading level 2 here. That would be the arrival at that point. So we've got the arrival here. We've had the reaction, and now we're looking for the first high above the level, and then we'll see an ABC correction at that point, and then we can go up further at that point. We can extend the wave count. We could actually put this over here as wave 3 as well, and look at this as 1 and 2 and 3 and 4 and 5 at that point as well. But you know, the normal process for things is that we'll get 5 waves up here that we're looking for, and then we'll have an ABC correction, and then further upside at that point. That's sort of how that works. And let's oh, sorry, I didn't mean to dump that straight away. We still got a bit more work to do on that. That was a monthly chart, and the stochastics are cruising along. We can still see there's more work to the upside there. This is the weekly chart here. We've been looking at the triangle, and it's possible to put this wave 4 over here, as I mentioned before, but when you look at the size of, say, well, diminishing, well, it's not quite diminishing, C and D and E here. There's a good relationship between E and D here, and B and C. So I kind of like that, the way it diminishes in there in terms of that. But we could certainly put this over here, onto this point here, and instead of counting this up here as wave 1, we could put this E over here and look at this as wave 1, 2, 3, 4, 5 up here, and have a 1 up here. So we'll talk about that as well on the 2-day chart here. This is how we've sort of had it here. We've been looking for a little move back down into here for wave 2, and then pushing up. But if I put the wave E over here, then this would be 1 and 2 and 3 and 4 here, and then going up for 5 here. But I have to say it's not going to make a lot of difference whichever way we look at it, because you know, we're still going to eventually move up here, and we're going to see the market have a vibration something like this before moving higher. Now, I've probably exaggerated the size of it, but in a way it needs to migrate from being resistance to support over here. We'll go to the tick chart and check where we're up to so far with this. probably a bit overkill there, but yeah. So anyway, I've been counting up here for 5 waves. It's sort of okay, but we could have that as wave 3 as mentioned before, and if this is a wave 4 here, then it won't come back any further and we'll have to call it in at this point. But yeah, we've got a very clear 5-wave structure here, so that means after correction we should have another 5 coming down. So we counted up here as an A, B, C for the A wave, and A, B, C for the B wave, and then 1, 2, 3, 4, 5 for the C wave here. Now we've got 1, 2, 3, 4, 5 here, so it looks like we're coming down here. Could we count this as bullish corrective? Yeah, well, there's overlapping wave structures, you could do that. So that wouldn't be, you know, well, you can do that. This also looks quite bullish here. So if this was going to go down from here, then because we would need, if it was going down for wave C, we'd need to look at this as wave 1 here, wave 2 here, wave 3, 4, and 5 coming down here for this. I'll just move these out of the way. So that would be wave C of 2 here for that. That would be the normal sort of process. But I have to say it's looking reluctant. I mean, even though we've got 5 waves down here as wave 1, this move here is not really giving me the ABC kind of look with all of this. I could put that there and just go an A and a B and a C to this point, but this is also looking a bit bullish here as well. So we just need to break down the problem, and this would be, at this point, this would be the 61.8% up here for this. That's where wave 2 can come back to. So what we could get here is 1 and 2 and 3 and 4 and 5 doing something like that, and then working lower at that point. But what I have to say is that any move above that point there, and you may as well add to the position on the long side, of course. Okay, so in a way it's doing all the right things, but I can see that it's more bullish than bearish, and you know, it doesn't want to sort of give me that that thing there, you know. I mean, the only other way I can get, but even that looks sort of impulsive here as an A wave. Not a, if that looked in 3 waves here, then I could like put this as the A, the B, and the C here, and sort of force it in there. But that's not right at that point. But yeah, so the other way to look at this really would be wave 3 up here, and wave 4 here, and then wave 5 coming up to the top here to make wave 1 at that point. Look, it doesn't really matter. It doesn't matter if you've got gold stocks or gold this or that, ETFs. It's just really a matter of holding on, really. I mean, it's bullish, you know, that's the story. And silver, I want to go back over this a few times so people can sort of get the idea of this. So we're going back into the early 90s here. We're looking at this as 1 and 2 and 3 and 4 and 5 here for 1, and ABC for 2 here, then 1 and 2 here. So you can kind of see where silver's got to go to here at this point. You know, it's crazy even to look at that, because we've got 5 waves in the opposite direction of this last trend down here. That means we're going to get another 5 over here. So that's pretty full on. So let's go to the weekly chart on this. So it would look like this move up here. I'm looking this as wave 1 here, and then the A, the B, and the C for wave 2 here. We can also view that a little bit differently. It don't really matter. This is looking like it really wants to move up, but there are certain levels along here that we want to basically move with. So let's just have a quick look at those. The first level is that, which we've been talking about, is the 25 here, which is the medium levels, halfway between $20 and $30 up here. So I'll just copy that there and plonk that there. That will be the next major level at that point. And really, it doesn't matter how you count this to finish it off here. I've just got it as wave 2 here, which would also be a larger wave 2, but we can get to that later, as wave 1, an A and a B and a C for wave 2, and it's expanded flat for wave 1, and then moving up here. Now this could also be wave 1 up here as well, right? So, but it doesn't matter, we're still going to get the same sort of pattern that I mentioned here as well. So yeah, I think we looked at that on the tick chart, but I won't bother about that today because I looked at the bigger picture and I've got a lot to get through. But buy silver, get an ETF silver, buy silver stock, do whatever you need, buy it physically, even better still, then at least you've got your hands on it. You know the story if you're a precious metal person. So crude oil, same as well. So, you know, this particular pattern here, you know, is pretty common in the commodities market, you know, and in the emerging markets as well. You know, it's just something that we've all gone through. You know, even Russia's got this as well, but Russia hasn't finished off its wave E here yet. You know, the wars that Russia's had, it was this one, and it's going into this one here. It's in a big triangle pattern. So, yeah, well, what can you say about this? Well, first of all, this move here is corrective, so that means that top will be taken out. So we'll see crude at 150, but that double tops are never the end of a trend, so we could see crude at 200. Now, you could start throwing stuff at me, and you know, I don't blame you, but, you know, it's possible, you know. I mean, I'm just looking at patterns, and I've been doing this since the 80s, you know, so there's nothing too low, nothing too high, and yeah, you just stay with the rules, and this is corrective. It's got overlapping wave structures, because you may be able to count it differently. You could count it maybe as an A wave here, B wave here, and then down for a C wave here as 1 and 2 and 3 and 4 and 5 here. So anyway, but whichever way you want to look at it, this is corrective. That top will be taken out at some point, and double tops are never the end of the bull campaign, as W.D. Gann would say. So we'd have to see it up higher at that point, you know. So the question is how to count this here. So I've been sort of scratching the old grey cells, and I don't really have an answer just yet, but the main point is that, you know, just get into your ETF, the XME or whatever it is, and those sorts of things, and you know, and hang on for grim death, you know, because it's maybe the worst things that can happen is that it, you know, it gets volatile in this space, as you would do, as you know, as these things, you know, so. Yeah, I remember that. This is when, like, hedge funds didn't really get involved in the commodity market, and this is where they did. They pushed it up into that point. I remember that. So anyway, yeah, so I'm just toying with this here in different ways to look at it. So I don't really have any, you know, final answers just yet for this, but that's the monthly chart. This is the weekly chart. This is how I've been looking at it, in terms of 1 and 2 here, and 3 and 4 and 5, or 1 and 2 here. And then this can be counted in slightly different ways. So, yeah, I mean, I could count this up as 1 and 2 to this point, and then 1 and 2 here as well. So, yeah, just haven't quite nailed it down just yet. I mean, because I do so many markets, you just don't get the time to ponder them in the way that they, and you know, explore them in the detail that they need, and looking at other markets that are in relationship to it and opposite, and all these sorts of things. But you know, I'm not going to be far wrong here with all of this. I'm okay with 1 and 2 here, by the way. I'm happy with all of this. It's just, how do we count this here, you know? This wave 2 here is a little bit small. Another way to count it, we could put, you know, wave 3 here, and put wave 4 over to here for this, and then have wave 5 up here, and have wave 1 up here, and then count 5 waves up here as 1 and 2 and 3 and 4 and 5, you know, and come back. But I don't like putting that wave 4 there, to be honest. It just doesn't sort of add up. I could put a wave 2 there because it's got an A and a B and a C correction there. You can kind of see it if I went into maybe a tick chart. Was a big tick chart, a big fat tick chart, 5,000. Yeah, this one here. So an A wave, a B wave, and a C wave here for this. you know, as a 1 and 2 here for that. And as you can see up here, we can look at this as 1 and 2 here. And this is probably all of the third wave here and the fourth wave, and then we're into the fifth wave here. Because the extension's in wave 3 here, that means that wave 1 here and wave 5 could be roughly the same. Now, obviously, there's, you know, all sorts of, you know, the story better than I do probably. So, yeah, let's just say that it's ongoing. So while it's ongoing, then this can just extend to the upside as well with all of this. So let me just come out of this 5,000 ticks and just go to 100 ticks and drop in here and have a bit of a look at 20k here. So yeah, so that's what we're looking at. I mean, yesterday we talked about all of this anyway, 1 and 2 here and going up for 3 here. Now I could have this as, you know, there's a good case to have this here as wave 1 here, and this here is 2 here as an A and a B and a C here, because that all sort of fits. But I still need to do more work on this. And then if we are, because we'll be in the third of the third of the third at this point, you know. So the wave 3 would be sort of way up here on this, extending even higher at this point. Now, normally, because when we talk about the 100 here, this is a CFD product, so it's 10 decimal points, but this is 1 here, 2 here, and 3 here. They're minor levels. They make up group 1. So if there's going to be any sort of corrections along the way, that's where they're going to happen here, you know. And between 1 and 2 here, of course, the Fibonacci sequence as I put in here will be, you know, same 1, 2, 3 to make up group 1, and then 5, and then 8. So just the Fibonacci sequence, 1, 2, 3, 5, and then 8 here. Anyway, I don't need to go into all of that, you know that. So yeah, look, it could just extend higher at this point. The worst that could happen at this point would see it come back across this level here and then push up at that point. So that's why it's good if you're using ETFs like EME and so on, you know. Alrighty, let's push on. I don't spend too much time. Copper. So copper's pushing up, of course, and I just didn't get my E wave in here. So, you know, maybe you know, I still need to mull it over. I was also thinking about it a little bit differently as well, because I was looking in here for this, you know, this here is a C here, and then an A and a B and a C for the D wave, and then into here for this as well. So that was probably the case at this point. This is the ETF here, of course. But I was thinking we could also look at it as 1 and 2 in here and look at it a bit different. That would be 1 and 2 to here, 3 to here, 4 to here, 5 to here, an A and a B and a C here. And that does leave this a little bit dodgy in here. But I'm going to go to the high-grade futures copper market here, and this is the daily chart. And yeah, so I just sort of, you know, I've been fluffing around with this and not being able to do my job properly, so I apologise for that. But I'm just going to go to the tick chart and 100 ticks. Yeah, it's just looking for my E wave. I just didn't get it, you know. And we're talking about having a B wave up here higher yesterday and so on and so on. So I haven't done a very good job. I just found it very complicated and couldn't get my head around it. So I've kind of blown it a little bit. But we got lots of positions in the ETF, so that's okay. And we sort of held those, even if we did get this or not. I mean, the only other way to look at this here, really, in terms of if I'm staying with my triangle pattern, is, as we sort of mentioned before, is having wave C in here of E here, and that would be it at that point. So the ABC here for that, and that, so I'll just clean these up here, we don't need those. And we're on our way at this point, obviously, you know. When we talked about this before as the A, the B, but it didn't quite reach my box. I shouldn't have been too fussed about it, but anyway, there we go. So we're off and racing. So it took a while. I thought that we'd be here, you know, early, just after Christmas sometime, but it just sort of lingered on. So let's just go back to our ETF for a moment, and let's just see where we can add to that here. Let's just, I think we should get another position in here above this new high here as well. And then what we'll do is we'll look to build in over here, and we'll buy some on the pullback here as well. I mean, the thing is, there's a beginning and a middle and an end to a trend. So, new traders see the end of the trend and they think, well, that's what I'm buying, that's what I'm getting, so I'll buy that, without them realizing that it's not like the real world where you see the car and you pay the money and that's what you get. You don't get that in the market. You get the complete opposite. So markets are just trends and corrections of different degrees, and you have to buy from the correction that's matured to a point, because that's when the next trend is going to be engineered from. But most people lose money in the corrections, so it's like burning their fingers on the stove. They don't like going back to it. They don't like them. That's not trending. I don't want it. But you have to understand the corrections, and they're not easy at times, especially these wave fours. This is why we build up a lot of positions early in the trend, because it's the beginning of the trend, And yeah, so we'll look. I mean, we should be able to get up, certainly up here somewhere, kind of moving with gold in a way as well, in its own way. They're kind of looking at each other in that sort of space. There's a lot of markets doing that. So anyway, yada, 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 won't waffle on, we'll just cruise on. And nickel's another one as well. So we've been loading up from nickel even further back in here, I think, from memory. So we've got positions all over the place, keeping our stops out of the way. Now, we were looking for a move to the upside here, and it's just sort of blown out a little bit. So maybe you've got that one there, so that's good. We bought back here anyway. We were looking for the first high above the level. We were never sure if this was 1 and 2 here, and then all of 3 here, and 4 and 5. The thing is that if this is going to continue or it's going to come back, I'll just explain this here. The Fibonacci sequence 1, 2, 3, 5 here, and then 8 here. When we talk about 8, we're talking about group 2. So the 28 here. So we're talking group 2, we're talking the 72, and we're talking this number here, the 2650. If this market finds a tested support in here with a classic trading levels pattern, which is the arrival, the reaction, the first high above the level, the ABC pattern, and then finds support. If this market finds support on that number, then it's going to continue going up. If it can't find support here, then it's going to come back and then move up. That's the thing of it all, It does look from this point here, if this is 1 and 2 here, and 3 and 4 and 5 here. But what I don't know if this is involved in the process as well, So I'm just going to borrow these, just to tag these here. So if that's the case, if this wave, don't need those for the time being. It did count down as an ABC, but we could also put that there as well. Now, if that's the case, if wave 4 is there, then we've got 1, 2, 3, 4, 5, and we can put wave 5 up here, and it can be wave 1 or it could be wave 3, as I mentioned before. And if that's the case, then we're coming back down here, and we'll pick up some more in due course. If, however, this wave 4 here is over here, then we'll have to look at this as 1 and 2 here. And then this would be all of the third wave here. So we'll still need to see wave 4 over here and wave 5 come over here. And then we're kind of in the thick of it at this point. We're deep into group 2 at that point. So we probably won't come back at that point, and we'll just continue to cruise up at that stage. So they're the two things. But look, to be honest, we've spaced out all our trades quite nicely through all of this. So we don't really have to worry about it too much, We can bring our stop over a little bit, but if it comes back down here, I will move the stop back down. I'm not going to get stopped out of a pattern that I understand, what's the point, so in the bigger picture of this, let's just go back so we can just get a bird's eye view of this, and I think it's on the, maybe on the weekly or monthly, let's just check. Not on the monthly, must be the weekly. Okay, so let me just get my bearings here. So, a bit like silver really, where we had this, I know that wave 4 overlaps wave 1, so that's a bit of an issue, but I'm still going with it. I don't care what you say, but that's that. A nice sharp wave 2 here. Obviously it looks like a 5-wave structure here, so we could go an A wave here, and then a B wave over here with an A, B and C over here for that. But it wouldn't line up with the rest of the commodity market. That was the other thing that was sort of, I've taken everything into consideration and this is the best thing here. And, I don't like to say that, I like to stay as humble as I can, but I think we've been pretty well sort of spot on with all of this because, and what I mean by that is that we can see that the trend is picking up speed. And what we're saying, what I mean by that too is that if that's wave 1 and 2 here, and then we've got wave 1 at cycle degree and primary degree and intermediate degree and minor degree. So we're going into the third of the third of the third and then into the third here. So, and the thing is that we're seeing the price action to confirm the wave count. That's what I like about this, and we've got it way up here somewhere. So we've captured all of this really nicely, I feel, even though I don't know we don't know everything, obviously there's better Elliott people than me around and people that specialize in, just in certain markets so they can spend more time on them, but I think we've done sort of all right with this. So apart from patting myself on the back here, the main point here is that between these two major trading levels, so basically 1, 2, 3, and then 5 to the upside, 50,000 up here. So then we go into the medium levels. So the medium levels are halfway between each major level. So the 25 here. So, the worst that could, because this has got momentum to it and it's in a parabolic move, it probably won't come back here. But the worst case scenario is that we will spend some time here before going up. Will it? Won't it? I don't think it will, but it could, and we'll be prepared for that because we're going to keep our stops out of the way. We're not going to get flicked out. We want to continue building in this. So I'll leave that at that. And uranium. So uranium's got a classic trading level pattern here developing as well. 3, 4, 5 for third, fourth, and then fifth up here. So when we look at that particular pattern that we always use, the arrival, the reaction, the first high above the level, the ABC, yada, yada, yada. So we're in this little space here at the moment. So we're going to go up and then we come back and and move in. So we've got a bit of a position in here. So we can look at, we'll be going up here somewhere, and then we're coming back here, and then we'll be going up there. So I'll leave that to you to decide on what you should do in terms of moving in and all those sorts of things. But we'll definitely be moving in over here. And if it turns into a parabolic move, we're taking from 20 to 30 here. We just count 1, 2, 3, 5, and 8. And when that's the Fibonacci sequence, then we copy that and we go 72 in there, and then we go 2650, the lower end of group 2. Now 2650. Now along the way here, just like nickel, but a thing, if we get support on that 2650, it's not coming back here. Right? If it decides that wants to, cruise along further. Anyway, just point that out a bit. So that's that. And natural gas, so we started to build into that. As you know, we can look at it in different ways. This is just another way of looking at it. We're built in here. We can build in here again. We're going to build on top of the 5, and we're going to continue to build in at this point. We could be in the third of the third here with everything going crazy at the moment. So it's a gas. I'll just have a look at 2,000 ticks. I'll just look on the 100 ticks. I can't remember what I've done or what we were looking at this point. The count 1 2 1 2 3 4, and it's not finished, so we're going up. We're going up. So we're going to label this what degree. I've got it as the E wave finishing here for that, for the triangle pattern. Let's just go back and have another look at that. Drill in a bit further. Oh, went the wrong thing, sorry, I'm getting a bit tired. 100 ticks and 2,000 on this side. Yeah, well, see, even our triangle pattern that we were working, that did all the, you know, we talked about it yesterday, giving us all the right things at this point, you know. So in terms of counting this to the upside, doesn't really matter at this point, but let's just make a start. I can change the degree of structure. I need to sort that out a bit later, but I will make some labeling here just so you've got some reference point on the wave count. And do we have any other things on this one? Okay, cool. I'll just borrow these guys. Delete these. Okay. My gutter's dripping out the back. We've had a lot of rain in Australia. Queensland's been flooded. Especially Lismore, it's been really flooded out. But I've got good Aboriginal friends and they just laugh at the white man building in houses in Lismore because it's below the sea level. They could never get their heads around it. I have to kind of agree with them a bit. Anyway, there's always something for sale, isn't there? So, 1 and 2 and 3, 4 and 5. So that will take us to this wave 3 here. And then we've got a little dance for wave 4 here and wave 5 there. Then we can look at this as wave 1 and then back for wave 2 here for that. So that's how that will play out, roughly speaking. So yeah, it'll probably move that quick too. Alrighty, so I'll just leave it at that. I know it's a bit messy, but so you can pretty much get in, you know, just anywhere really. We'll just make a trade here. We'll be looking to get back in over here. We'll take that top out over here and we'll build in over here. That's basically what we're going to be doing. So in a nutshell, even though we've got a small trade in here, we're going to, all we wanted to do was get a few positions below this number here, and then we're going to be building up in here. And when we build up in here, we're going to be looking at 1. This is where we're going to build in through here. We want to get at least 4 trades in here. The time that we want at least 4 trades above the 5,000. So on the 5,000 as close as we can, maybe below as well. On the 5, on the 1, on the 2, and on the 3. When this number here becomes the tested support, then we're not looking, it's leaving this number. And then we're going up. So the next number up is 5, as you know. 1, 2, 3, 5, and 8. Not a lot to remember. So that's it. Alrighty, I'm out of here. Thanks for tuning in. Cheers.